There's something called fractional reserve banking. This is how our entire system is set up. And so when a bank receives $100,000, they are allowed to lend $1 million. So they take your money, they multiply it times 10, and if the average interest rate is about 15% overall, all different classes, they're making 15% on $1 million, which is $150,000. And how much did you get again? 0.08%, and maybe a toaster. But this is our banking system. Since the creation of central banking, our federal banking system has worked like this because everything is all coming from the same source. It's all the US dollar, right? So could this create some problems, do you think? I mean, if banks are loaning out 10 times what they receive, yeah, that could be a little bit of an issue. And we've seen this happen. In 1929, the stock market crashed. At this point, people didn't know that stocks could go down. They thought they only went up. Stocks went down. There was a run on banks, and this is what led to the Great Depression, right? People went to banks. They started pulling all their money out. Banks were like, hey, we don't have all your money. 4,000 banks fail, go completely out of business. There was no FDIC, so that meant all Americans that had money sitting in the bank, if their bank went out of business, they were informed, you no longer have money, which led to the Great Depression. Could you imagine something like that happening? It seems crazy, right? But that was 1929, not even 100 years ago. So 1933, they created the FDIC to give people confidence to come back to the banking system because, again, if you want people putting their money in the bank, you've got to come up with another way to get people to put their money back in the bank. So they insured people up to $2,500 at that time. Do you guys know what the FDIC limit is now? $250,000. And by the way, that's per bank, not if you have multiple accounts with the same bank. So if you're thinking, well, I'll put $250,000 in 10 different accounts so I can insure $2.5 million, it's only per person per bank in total.
Come meet us live and become a real estate investor with us. Make money, grow, and help the community as well. So this is what I love to do every day as a real estate investor. I love to connect with you throughout our social media, and I love to make money with you as well.